Pepsi in general, I mean, you should be able to go buy a Pepsi for a couple bucks, right? Or even $1. But again, they were jacking up prices to the point where many outlets, many grocery stores and chains actually said, hey, we're not going to sell your product. In fact, I don't know if it was Walmart, but it was one of those that said, hey, we're not going to carry if you're going to continue to jack up prices. Well, guess what? The consumer is putting down their foot here and saying, you know what? We're not going to buy as much. And sure enough, their revenue misses. Their stock's not down that much, but again, it is down on the day. NET, this is a cloud play, up 24% in pre-market. We're going to take a look at that chart in just a minute. And then also the Dallas Fed President, Lori Logan, is expected to speak at 1:30 today. Not a lot of economic data today, but you never know on a Friday afternoon. What do they say? Does it move the markets? 1:30 p.m. Eastern time. Put it on your radar. Lastly, Tesla aiming to extend its rally to a fourth session to end the week. Shares are down 24% for this year. Remember, folks, I've talked about that support level, and so far that support level has been the great buying opportunity that I did say. All right, couple other things before we get into the charts real quick. Here's your Fed Watch tool. The reason why I want to bring this up, and in general, unless we're getting a Fed announcement, I want to bring it up only on Fridays, is that we can start to see that we're now seeing only a 53% chance of a cut in May. Now, it's still favoring a cut in May. Starting in COVID, that's where the divergence has gotten insane, right? To the point where you've had this move up where the Russell, again, still has not made a new all-time high or even come close. And the reason why I point this out is I'm still in the thesis of that we will see at least a short-term catch-up. There's going to be this interim point, right? There's going to be an interim point where there will be some profit taking in mega cap tech at some point. NVIDIA will pull back. These other semis will pull back that are mega caps now. You will see, again, Microsoft have a pullback just because of natural rebalancing even within portfolios. So when that happens, what's going to happen is the rebalancing will shift money down here to the Russell, and it should propel it back to the upside. Now, how much upside will we hit new all-time highs on the Russell? I honestly don't know, but what I do know is that, again, that for me at least is one of the trades that I position myself to. To confirm that bias, I look at the Russell IWM chart, and we've talked about this before, but we have a very clear uptick there, here, and then we have here to here, right? So you have this long base going back to the highs of 2021 where you have this wedge pattern. And what we can clearly see is that we do have the breakout, but because people are so irrationally exuberant about the mega caps, the money yet hasn't trickled down to these lower levels. Now, again, I want to be clear, other things to focus on today. Expedia is getting crushed. Now, as an economic indicator, this is something I pay attention to. So Expedia, a travel website, why are they suffering so much here? Is it a misstep on their part? Or is it something bigger in the macro that's beginning to develop here? Are people actually starting to cut back on big-time vacations? Remember, there was this big surge after COVID. Lockdowns got lifted. Everyone was like, yo, I don't care if I have to, put it on my credit card. I'm traveling here. I'm traveling there. I'm getting the heck out. Now you've kind of come past that, and it looks like, based on this move, that there's some trouble brewing in the travel industry. Okay, so next up, what are we going to do? Well, we see it's trading at 134. Let's go find out and see if there's a level here to trade, okay? So right off the bat, I'm trying to see here. So if you're aggressive, I do have a level for aggressive traders. And the aggressive trader, see right here, there's a gap from here, and it gapped up here, and then this is where it kind of went up here. So this is at 129.75. That would be my first level to watch. So it's about $5 lower than the current price. Now, if you're someone like me who's a little bit more conservative, and you say, listen, I'm okay missing a trade because I don't want to take the risk that I could be wrong, and by the way, naturally, I'm going to be wrong multiple times. It's just the nature of trading and investing. But if you're more conservative, where would your next level be in the semiconductor stocks? There was a point where cloud stocks were the hottest thing ever. Like, look at CrowdStrike and the chart on that one. And so again, as a trader, I start to recognize these these repetitive cycles within different sectors. One sector becomes the one that everyone has to get into. It has crazy moves like this, where it goes from like, $50 to 200 and change, 300 and change, then it collapses. You look at, the marijuana stocks. For those of you guys remember years ago when those stocks came public, holy cow, that was like the most thing. Solar stocks did that at one point, where again, First Solar had this move up from like $20 to $300. It was incredible. But my point is, again, you have to start drawing parallels to what's going on. What's the hot thing right now? AI. And again, doesn't mean that AI stocks, cloud is great, right? It still exists, but you get overdone. All right, I digress. Going back to levels here, let me just scan through here. I see a level here on right through this pivot here, right? There's a bunch of little pivots right there, and that brings us to about 121, but I think, wasn't it trading above that? Let me just do a quick check. No, it's at 112, 113. So 121 would be your first level Bitcoin, right? So Bitcoin here, guys, this continues to push up. Now, we talked about this, right? We said that as long as you don't get through this line and close and confirm, then this is resistance. However, 3 days ago, or 2 days ago now, well, that's 3, right? It closed above, confirmed, and there it goes. So this is the key about technical analysis, right? Technical analysis guides you. You have your level. If it gets broken, all of a sudden it breaks resistance. Like there's a ceiling there, right? So you continue to hit on that underbelly of the ceiling. The more you hit, the weaker that ceiling becomes until you finally break through. Once you're through, there's a lot of room. There's a lot of room above that ceiling to go. And that's why you're seeing this extended move coming up here. Now, where is it most likely going to go? Well, chances are you're going to be in here. I mean, yeah, maybe in this area, but potential upside is still right up here at around 49 to 50,000. Now, again, will I short? I don't know yet. I got to look at the price action. I got to see if I have other factors forming. Do I get some time counts? Do I get some other trend line calculations and so forth? But I am monitoring it as, again, I covered my short when we were below 39, made a nice little chunk of change with members. Now I've been waiting on the sidelines to see what it does here. And if, again, it gets maybe 50,000, the bigger pattern is still that breakout there. But if we break right through here, you have support right there, and then you have secondary support here at 1975. So yeah, there could be a little downside there, but nothing to write home about at this point. And it makes sense, right? As long as you have risk on in the stock market and we're hitting new all-time highs in 5,000 and all this stuff, gold is not a favorite asset, right? People aren't rushing into gold because of where the markets are right now. Now, if the markets start dropping, if we get scared, if it looks like a recession is coming, that's where gold will shine. Okay, next up, let's take a look at just a couple more things, just checking the time here. We have silver. This is your bigger picture on silver. This is the monthly chart. The reason why the daily chart doesn't show a whole lot. It could come down to 2150 on silver, but the monthly is really what I like to look at here. So again, one of the things on the monthly, and by the way, this gives basically our 1 to 2 year price action, is this pattern here. I really like this pattern here, kind of the same sort of inverse head and shoulders that gold's putting in. I love this move up. You could also argue this is a flag pattern, so this could also be a flag pattern in here off of this up move. So as long as basically we don't take this out down here, which is way lower, I mean, I would be crazy if we took that out, then this remains overall on the longer term a bullish chart on silver. All right, just a couple others here, guys. You know I'm going to get to natural gas because that continues to be basically we potentially have a bottom if this holds. Now, it's still very early in the day, but look at the tail, look at where we are. That potentially is a bottoming tail. So you may have a bottom today. Let's see where this closes. But again, interesting little tidbit there. The other thing I want to show you, and I'm going to leave you guys with this because I got to head to my trading floor and start trading the markets. But you want to see something crazy? Do a measured move from the high on the last drop. So from here down to here, right? So if you look at this, from this high to this low before we had this bounce, basically 40%. 40% drop in natural gas. Now, what do you think from here to here is? Let's do it. Take that into account. Let's bring up that same tool. We take the high to the low. 40%. I don't know. I just point stuff out. You guys can come up with conclusions. But I love this. I mean, this is what I live for, guys. The symmetry of the charts, this kind of, seeing these patterns develop that repeat over time, these drops, these measured moves. It's so freaking cool.